If you're navigating divorce or separation right now, you're probably feeling overwhelmed, uncertain, and maybe even a little lost. You're in the right place. This is the Soft Landing Divorce Podcast, where we prove that even in the midst of ending a marriage, you can move forward with dignity, clarity, and yes, peace. But here's what makes us different. Ken and Sarah are going to share solutions and strategies that the divorce industrial complex never talks about. The approaches that will open your eyes to things unseen by most and can save you time, money, and emotional turmoil. Today, they're tackling something that trips up countless people: how to complete your financial disclosure forms without making costly mistakes, even if you're overwhelmed by the divorce process. These forms might seem straightforward, but the hidden pitfalls can be devastating to your financial future. Whether you're just starting to consider separation or you're deep in the process, our goal is simple: to help you and your children land as softly as possible on the other side. So grab your coffee, get comfortable, and let's dive in as Ken and Sarah reveal the critical details that could make or break your financial settlement.
I've got an eye-opener coming your way. Hey everyone, welcome back to the Soft Landing Divorce Podcast. I'm Sarah, and today we're diving deep into something that honestly scares the heck out of most people going through divorce. We're talking about Form 13 and Form 13M. And, well, if you're feeling overwhelmed by the whole financial disclosure thing, you're definitely not alone.
Oh, Sarah, you know what? You're absolutely right about that overwhelming feeling. I see it every single day in my practice. People think these forms are just paperwork to get through, but there's so much more than that. They're the foundation of everything that happens next in your divorce.
Okay, so before we get into all the nitty-gritty details, can you tell everyone a bit about yourself? Because I know you've been helping people navigate this stuff for years now.
Absolutely. So I'm Ken Maynard. I'm a certified divorce financial analyst and accredited family mediator, and I've been guiding couples through Ontario's divorce proceedings since 2010. What I really love about what I do is, well, I help families across Ontario and beyond through secure virtual mediation, and I really emphasize financial clarity using tools like Forms 13 and 13. Through my soft landing divorce settlement method, I provide what I like to think is a compassionate, cost-effective alternative to that adversarial litigation that nobody really wants to go through.
That soft landing approach, I love that concept. But let's start with the basics here, because I think a lot of people are confused about this. Are Form 13 and Form 13 the same thing? Because I've heard people use them interchangeably and...
No. They're absolutely not the same, and this is such an important distinction that people miss all the time. Form 13 is what we call the financial statement for support claims. So if you're dealing with child support or spousal support issues only, that's your form. It's focused on income, expenses, assets, and debts, but it's really tailored for support situations.
Okay, so that's Form 13. What about 13.1?
Form 13.1 is the financial statement for property and support claims. This is the big one, Sarah. This is when you're dealing with both support issues and property division. It requires way more detailed information than Form 13. We're talking comprehensive details about property division, income, expenses, assets, debts, the whole 9 yards. So if your case involves claims related to both support and property division, Form 13.1 is what you need.
So it sounds like 13.1 is more comprehensive. But Ken, I have to ask, why are these forms so important? Like, what happens if someone doesn't take them seriously or just rushes through them?
Oh boy, that's where people get into real trouble. These aren't just forms you fill out to check a box. They're financial statements that play a massive role in your entire divorce process. When I work with clients, I always tell them, look, these forms inform the court and both parties about your financial status. They coordinate the exchange of financial information so everyone's working from the same data set. They organize everything in a logical way that makes it easier for courts to review.
That makes sense, but can you give me a more concrete example of what you mean by inform and coordinate?
Sure. So when I say inform, I mean these documents give both parties and the court a complete picture of each person's financial status. We're talking assets, liabilities, income, expenses, everything. This comprehensive information is absolutely essential for making informed decisions about financial settlements. And when I say coordinate, well, by providing a standardized format for financial disclosure, these forms make sure both parties are working from the same data set, which is crucial for fair negotiations.
Okay, that's helpful, but I'm curious about something else you mentioned. You said these forms also educate people. What do you mean by that?
You know what? For many people going through separation or divorce, Form 13 and 13.1 serve this really important educational role. They help people understand the full scope of their financial responsibilities and rights. I can't tell you how many times I've had clients say, I had no idea we had this asset, or I didn't realize this debt was part of our marital property. These forms lay out what needs to be considered and disclosed financially, and it really opens people's eyes.
That's fascinating. Now let's get practical here. When do you actually need to complete these forms? Because I'm guessing not every divorce case requires them.
Great question. If your family law case involves a claim for child support, spousal support, or property division, you must complete, file, and serve these forms. Now, there are some exceptions. If your case involves only child support claims and you want the other spouse to pay just a table amount under the child support guidelines, you might not need them. Also, if you and your spouse are filing a motion to change support on consent and you both agree to skip the financial statements, that's another exception.
So most people are going to need these. Now, let's talk about what actually goes into these forms, starting with income and expenses. What do people need to know?
Okay, this is where people really need to pay attention. Family law in Ontario requires you to provide detailed information about your income and expenses. For Form 1.3, this goes in parts 1 and 2. For Form 1.3.1, you've got parts 1, 2, 3, 4, and 5. Plus, you need to disclose non-cash benefits and automatic deductions from your income.
Non-cash benefits, what does that include?
Good question. Non-cash benefits might include things like a company car, health or life insurance, disability benefits, sports or gym memberships, anything of value that you receive from your employer or other sources that isn't direct cash payment. When filling out income details, you need to set out your income in relation to a specific period. If you're self-employed, it might be more appropriate to use last year's income with an explanation. If you're a wage earner, you can use present or future income.
And what about if someone has multiple income sources, like maybe they have a job but also some rental income or...
You need to include every source of income available to you, whether it's taxable or non-taxable. If necessary, you complete Schedule A to Form 13, which is titled Additional Income Sources. This is really important because the court needs the complete picture. You can't just list your main job and ignore everything else.
Okay, and expenses, I imagine that gets complicated too. What should people be thinking about there?
Expenses can be tricky. You need to set out your expenses in relation to a specific period, and it might be helpful to use the last 12 months of cohabitation. You can actually have different expense schedules, one for when the family was whole and one for after separation. Here's a practical tip. Multiply weekly costs by 4.3 to get the monthly amount, or by 12 to get the yearly amount. Divide annual costs by 12 to get monthly costs.
That's really helpful. Now, what about property and debts? Because that seems like it could get really complex, especially for Form 13.1.
You're absolutely right. It does get complex. For Form 13.1, property and debt information goes in Parts 7, 8, 9, 10, 11, and 12. For Form 13, it's Parts 3, 4, and 5. Here's what people really need to understand. You need to list all property and debts owed on the date of marriage, and you need to compile all the evidence and documents supporting these.
Wait, the date of marriage? So we're going way back in time here?
Exactly. You need to note the value of property at 3 key dates: the date of your marriage, the date of separation, and the date you made the financial statement. And here's something crucial. You list only property owned, not property that was just used or possessed on those dates. If property was jointly owned, you show 50% interest in value using joint at 50%.
That seems like it would require a lot of documentation and record keeping. What if someone doesn't have all those old records?
That's a common challenge. And it's why I always tell people to start gathering documents as early as possible in the process. You use market value rather than purchase price or replacement value. For debts, it's similar. You list debts that were owed at the date of marriage, date of separation, and the date you made the statement. For jointly held debts, you list half the value as joint at 50%. And don't forget to include future debts like deferred personal taxes or capital gains tax.
Now, Ken, let's talk about something that I think trips people up. What about excluded property? Are there things that don't need to be included?
Yes, there are exclusions, and this is really important to understand. Inheritances and gifts acquired from third parties after the date of marriage are excluded. Insurance proceeds and damages for personal injuries are also excluded. But here's the thing. You still need to be careful about how you document these, because the other party and the court need to understand why something is being excluded.
That makes sense. Now, what about if someone sold property or got rid of assets recently? Does that need to be disclosed?
Absolutely. You need to disclose all property by category that was disposed of within the 2 years before making the financial statement or during the marriage, whichever is shorter. This prevents people from trying to hide assets by selling them off before the divorce process.
Smart. Now, I want to talk about children for a minute. Are there special considerations when kids are involved?
Great question. There are instances where you need to create a child expense budget. This is necessary when the child is over 18 years of age in situations of shared custody under Section 9 of the Child Support Guidelines, or when claims relate to special or extraordinary expenses. This helps the court understand the real costs of raising the children.
And what kind of child expenses are we talking about? Like, how detailed does this get?
You're looking at housing and utilities, medical and dental costs, educational expenses, extracurricular activities, really anything that relates to the care and well-being of the children. The more detailed and accurate you can be, the better the court can understand the financial needs of the family.
Now, once someone has filled out these forms, What else needs to be included? Like, what documentation has to go with them?
You need to attach several key documents: proof of current income, like your most recent pay stub, copies of your personal income tax returns for the prior 3 years, copies of your notice of assessment or reassessment from the Canada Revenue Agency. These are all mandatory. And then you must complete Form 13A, which is the Certificate of Financial Disclosure, to certify which financial documents you've served on your spouse.
Form 13A. So there's yet another form involved. This really is comprehensive, isn't it?
It really is. And that's the point. The court system wants transparency. Form 13A ensures that both parties know exactly what financial information has been shared. You serve this form on your spouse along with all your other financial documents. It's all about creating trust and credibility in the process.
Ken, I have to ask, what are the biggest mistakes you see people making with these forms?
Oh, there are several big ones. First, people don't take enough time to be accurate. They rush through them because they're overwhelmed or they think they're just paperwork. Second, people don't gather all the supporting documentation they need. Third, they don't understand the difference between Form 13 and 13T, so they fill out the wrong one. And fourth, they exaggerate expenses or try to hide assets, which always backfires.
That last one, trying to hide assets, I imagine that can really hurt someone's case.
Absolutely. The court system is designed to catch financial dishonesty, and when it does, it damages your credibility for the entire case. I always tell my clients, be transparent, be accurate, and be thorough. It's so much better to over-disclose than to under-disclose and have it discovered later.
So transparency is key. Now, for someone listening who's feeling overwhelmed by all of this, what would you say to them? Like, where should they start?
First, don't panic. Yes, these forms are comprehensive, but they're manageable if you break them down into smaller pieces. Start by gathering all your financial documents: bank statements, tax returns, pay stubs, investment statements. Create a filing system. Then determine whether you need Form 13 or Form 13, based on whether your case involves property division. Take your time and don't be afraid to ask for help.
And what kind of help is available? Because I'm sure not everyone can afford a lawyer for every step of this process.
That's exactly why I developed my disclosure and financial statement workshop. It's designed to be affordable, efficient, and effective. The workshop pinpoints the legal issues you're addressing and strategically positions you ahead of these issues through meticulous financial disclosure. It builds trust and credibility, reduces costs, shortens the resolution time frame, and strengthens your legal position.
That sounds really helpful. Now let's talk about timing. When in the divorce process do these forms typically need to be completed?
These forms are required early in the process if you're making claims for support or property division. You need to complete, file, and serve them as part of your court documentation. The sooner you get them done accurately, the smoother the rest of your process will go. Delays in financial disclosure often lead to delays in the entire case.
And what happens after someone submits these forms? Like, what's the next step?
Once both parties have filed their financial statements, that information becomes the foundation for all the negotiations that follow. Whether you're going through mediation, collaborative divorce, or litigation, these forms provide the factual basis for determining support payments and property division. They're really the starting point for everything else.
Ken, I want to ask about something that might be sensitive. What if someone discovers that their spouse hasn't been honest on their forms? Like, what if they find hidden assets or undisclosed income?
That's actually more common than people think, and the legal system has mechanisms to deal with it. You can request additional financial disclosure. You can question the other party under oath, and in some cases, you can hire forensic accountants to investigate. The court takes financial dishonesty very seriously, and there can be significant consequences for someone who tries to hide assets.
So the system has checks and balances. That's reassuring. Now let's talk about the emotional side of this for a minute, because I imagine filling out these forms can be really difficult emotionally. You're documenting your entire financial life during what's already a stressful time.
You're absolutely right, Sarah. It can be emotionally challenging because you're forced to confront the reality of your financial situation, often for the first time. Many people have never had to think about their finances in such detail. But here's what I tell my clients. This process, while difficult, actually empowers you. It gives you clarity about where you stand financially, which is crucial for making good decisions about your future.
That's a really good way to look at it. It's not just paperwork, it's actually taking control of your financial situation.
Exactly. And that knowledge is power. When you understand your complete financial picture, you can make informed decisions about settlement offers, you can plan for your post-divorce life, and you can ensure that any agreements you reach are fair and sustainable.
Now, as we start to wrap things up here, what would you say is the most important thing for someone to remember about Forms 13 and 13?
The most important thing to remember is that these forms are not just bureaucratic paperwork. They are the foundation of your entire divorce settlement. The accuracy and completeness of these forms will directly impact the fairness of your final agreement. Take the time to do them right, gather all the necessary documentation, and don't be afraid to ask for help when you need it.
And what about people who are worried about the cost of getting help with these forms?
I understand that concern, and that's exactly why I created affordable options like my workshop. The cost of getting help with these forms properly is minimal compared to the potential cost of getting them wrong. Mistakes on financial disclosure can lead to unfair settlements that last for years or expensive court proceedings to fix problems later.
That makes a lot of sense. Invest a little up front to save potentially a lot down the road.
Absolutely. And remember, the goal is to create a fair, sustainable agreement that allows both parties to move forward with their lives. Accurate financial disclosure is essential to achieving that goal.
Ken, this has been incredibly helpful. Before we wrap up completely, is there anything else you think our listeners really need to know about this whole process?
I think the key thing is to approach this process with the right mindset. Yes, it's detailed and comprehensive, but that's because family finances are complex. The court system requires this level of detail to ensure fairness. Don't see it as a burden. See it as an investment in your future. And remember, you don't have to go through this alone. There are resources and professionals available to help you navigate this successfully.
So as we wrap things up, this has been such an eye-opening conversation about Forms 13 and 13. Ken, thank you so much for sharing your expertise with us and really breaking down what could be a really overwhelming topic into something manageable.
Thank you, Sarah. It's always my pleasure to help people understand these important aspects of the divorce process. Knowledge really is power, and when people understand what they're dealing with, they can make better decisions for themselves and their families.
And on that note, I want to leave everyone with this question to think about. What might you do differently now that you understand the critical importance of Forms 13 and 13.1 in divorce proceedings? Because understanding these forms isn't just about filling out paperwork, It's about taking control of your financial future during one of the most important transitions of your life.
That's beautifully said, Sarah. And remember, whether you're just starting to think about separation or you're already in the middle of the process, it's never too early or too late to ensure your financial disclosure is complete and accurate. Your future self will thank you for the effort you put in today.
Perfect way to end it. Thanks again, Ken, and thank you everyone for listening to this deep dive into financial disclosure forms. Stay curious, keep those questions coming, and until next time, keep building that foundation for your new beginning.
And that's a wrap on today's episode. Divorce doesn't have to be as complicated, costly, or drawn out as the industry often makes it seem. You have more choices than you've been told, and more strength than you may realize. Whether you're just starting to think about separation, or you're deep in the process of navigating financial decisions during divorce, remember that knowledge is your greatest ally. If today's conversation resonated with you, here's what we'd love you to do. First, subscribe to the Soft Landing Divorce podcast so you never miss these strategies that could change everything for your family. Second, leave us a review. It helps other people who desperately need this information find us. And if you know someone who's struggling through separation or divorce, please share this episode with them. Sometimes the kindest thing we can do is let someone know they're not alone, and there's a better way forward. All our resources, show notes, and connection links are waiting for you right in the podcast description. We're not just here once a week. We're building a community of people who believe that divorce doesn't have to destroy families. Hit that subscribe button, because we've got so much more to share with you in the weeks ahead. Until then, keep moving toward your soft landing. You've got this, and we've got you. That's Ken and Sarah, and we'll see you next time. Disclaimer: the information provided in this podcast is intended for general informational purposes only and does not constitute legal advice. For legal guidance specific to your situation, please consult a qualified legal professional in your jurisdiction.